In today's video, we will see how support and resistance strategy works. We will see some traditional methods which does not work anymore, especially in cryptocurrencies. Then we will see how to draw support and resistance levels which work. After that, we will see some price patterns around support and resistance levels. Then we will see how to plan our entries around those levels. And in the end, we will see how to plan our exits around those levels. This is how I learned to draw my lines in the beginning, or my support and resistance levels in the beginning. What I would do, I would just find an area where there is price consolidation, or where there are touch points on the chart. So I would draw a line like this. For example, this line I drew because there is these all the price levels are touching this line, and here they are touching this line, and then I would see higher highs and higher lows. For example, this is higher high and this was a resistance, it became a support here, it was a resistance, it became a support here, and there are, see, you can see also there are many touch points on the same lines. So in the beginning, if you are drawing these type of lines, don't worry, I was the same and I used to draw my lines like this. But these lines are not the right way to draw your support and resistance. Why? Because look, this chart looks so messy, it's full of lines, the chart is full of lines, and you cannot see what the price is doing, how the price is behaving. Actually, what is the importance of support and resistance? They are no more than reference points. They are reference points on the chart where you can see how price behave there. But in this type of chart where there are a lot of lines, and everywhere when you find a touch point you draw a line, it doesn't work like this. And if you have learned like this to draw your support and resistance, please stop doing this, because this is not going to work. You will have trades opportunities every now and then, and there will be too many trade opportunities if you follow these trend lines, and your stop losses will be taken a lot, and you will not become profitable with this type of strategy. If your chart look like this, it's a better way to draw your support and resistance than the previous one, because the chart looks more cleaner and you have identified areas. Because we have learned that support and resistance are not a line, they are areas on the chart where price can reject or where price can get support. For example, in this one, this is an area where the price is rejected. Same way here where the price is rejected, but here the price is being supported. So these are areas on the chart where the price is supported or where the price is rejected. So if you draw something like this boxes on your chart, it's a better way than the previous one. But there is a big problem with this type of support and resistance as well. If the prices are trending, like we have learned, the prices move in wave like pattern, this support and resistance will work perfectly well. But the prices does not always trend at one direction, they stop and then they reverse. If, for example, let me tell you, now here we can see that the price is in beautiful uptrend. So it was a high, and then it broke this high, and now another high, it broke this high. Now the price is, what we see, the price is trending upward in a wave like pattern, and what we expect, the price will come here and it will go up. But what if the price doesn't stop here and it comes here and do like this? The problem with our mentality, our thinking is that if there is a trend, we will be always thinking that this is going up until it's very late. So most of the time, if the price comes here, the price, logically we know that the now support has become resistance, but what we think that this is still an uptrend and it's a deeper retracement and the price will continue to go up. Now this is the biggest problem so many traders face with these type of support and resistance when they draw boxes like this, and when the trend changes, they don't understand the trend has already changed, but they continue to think that the trend is still up and I have to take a trade from this level. and then they take a trade from this level, they fail. They take a trade from this level, a buy trade I'm talking about, they fail, because now the price is trending towards downside. Price is already trending down and you are taking buy trades. So this is the problem with this support and resistance, and maybe this is the problem with you people, that you are drawing your support and resistance and then relying on those support and resistance, that it is a support, we have to buy here, and you are not giving proper consideration to the trend, that the trend of the price has changed. Now I have to switch my thinking to the opposite side. Then what is the solution for that? Let's see how we can solve this problem. Now we have studied the traditional ways how people teach or how people draw their support and resistance levels. But now let's go and see how I draw support and resistance level, which works actually. It works for me and it will definitely work for you. What I would do, I would not draw any lines on my chart. If you see my charts would be clean like this, no lines on the chart. What is my next job to do? When I start to see the chart, I would try to understand what the price is doing. And if you see, what is the price doing here? The price is making higher highs and higher lows. So if the price is making higher highs and higher lows, it means the price is in uptrend. And what we do in uptrend? We buy in uptrend. And if the price was trending towards downside, we would sell in the downside. But now the question is how to draw our levels. Now we have to find the most recent high in an uptrend and most recent low in the downtrend. So it is an uptrend. So what we will do, we will try to find most recent high. So this was the most recent high until this high has been made. So this high was the most recent. Now this high is broken. So what we will do, we will draw a line right on the top of this wick, and this will be our resistance level. And what we will do, then we will try to find the low of this recent move, and then we will draw a line there. So this was the most recent low of this move. So what I will do, I will draw a line here which will cross, and it's good thing that it's crossing the previous high also. So now this is my levels. This is how I draw my levels. If this was a downtrend, how I would draw my levels then? Then because in the downtrend, we have to trade to the downside. So for example, this one, this was a high, this was a low, this was a high, this was a low. So the recent low is this one. So I will draw a line here, and the recent high is this one. Then I will go and draw a line here. So now I would work with this area. I would not look back and I would not look here. I would work with this area and I would see that how the price behaves when reaches this area, or how the price behaves when reaches this area. So this is how I draw my support and resistance. Let me give you some more examples from recent charts. Let's open a BTC chart, and this has already been, I think this is drawn. Yeah, this has already been drawn on my chart, that I drew my levels. Look, this my levels are being drawn. So this was the high, this was the low. So I draw a line there, and this is trending upward. See, the price is trending upward, and my job is to draw my support and resistance according to the trend. So the trend is up. I would draw levels on this area where it's a high and it's a low. And what I will do, I will buy here. I will not sell here. I will see, I will observe. If I'm trading, I will sell here, and if it breaks, I will buy again. Now that we have learned how to draw our support and resistance areas, our next job is to learn what type of price patterns to observe around these areas. Now, there are different type of price patterns we have to observe around both of these areas. They are candlestick patterns or price patterns. They could be single candle pattern, multiple candle patterns, or different type of other patterns. So some of the patterns which are very important to learn, I will mention here. So one of them very important pattern is, for example, if you are on the price is on the resistance and the price goes up and then it immediately gets rejected and closes below the previous day's close. So we have a price pattern something like this, a single candle price pattern something like this, which we call a shooting star. So if we observe a pattern like this on the resistance area, we have to book our profits, reduce our positions, or completely close our positions. Another pattern which we can see here on this area, so maybe if the price goes up like this, and for example this is a green candle, let me make it green, it's a green candle. So let us make this candle green, and then immediately the second day or the second candle comes and it's a red candle and it covers all this candle. So for example this candle here, so if we see this one, so one is green candle and the other one is red candle. This candle we will, if we have this type of pattern where one is green candle, the other one is red candle, so this is bearish engulfing candle pattern and this is two candlestick pattern. So we have to observe these two types of candlestick patterns here, that if any one of these candle pattern appears on the chart, we will try to reduce or exit our trades or reduce our position. So now okay, if we have these two candle patterns, okay, I'll put it here, and this is a candlestick pattern, so we have to see candlestick patterns around this area. So other than these candlestick patterns which are single and two candlestick patterns, we might see so many other type of patterns from which we can understand the price wants to move up or the price will try to move down. So these are wicks of the candles. So if we see price is going up and then there are huge wicks or big wicks to the upside, and the price is closing near this area, for example price is closing here, price closing here, price closing here, but there are wicks to the upside, this shows that this price or this upward move is weak and it can reverse anytime in the opposite direction. If we see the price goes up and then it makes a wick down there and it closes up somewhere here, or the price comes down and closes somewhere here. It's not exactly like this pattern, but somewhat like this pattern and has a lot of wicks. If we have this type of pattern that the price goes down and then it gets rejected and closes above these levels or near these levels, these are actually strong signs that the price wants to move up. So we have structure, we have single candle structure, we have multiple candle structure, and we two candle structure, and we have multiple candle structure where we observe wicks of the candle. Now to the support side, what patterns we see? We see same patterns. This is the same exact pattern, but only the color is different. But this one is only the body is to the upper side. So what are those patterns? So this one we call hammer. If the price comes down and it gets rejected all the way up and the price closes above this level, we call it a hammer. And for engulfing pattern, we have opposite colors of these two here. For example, first candle would be a red candle, which comes down. Let me draw a red candle here, which comes down like this. And then we will have the other candle, which would be a green candle to the upside. So there was a red candle and now there will be a green candle which is engulfing this candle. We call this bullish engulfing candle pattern. So this is two candlestick pattern here, right opposite to this one, but this one is bullish and this one was bearish. What else we can observe here? What other patterns we can observe here? Let me put these patterns here. We can observe wicks here, how the candlestick wicks are formed. If the price comes down and closes near or below this area or above this area, and we have something like this. If the prices are coming down and they are getting rejected and they are closing near these areas, this is actually some kind of strong signal that this price want to reverse from this area, or in another words, here the price is going to get rejected from this area and price is going to have support from this area, and we can see an upward move. So these are some of the price patterns which we have to observe around these areas. Now that we have learned how to accurately draw our support and resistance levels and what price patterns we have to look for on those support and resistance levels, now it's time to learn how to enter the market. We know that in an uptrend, we only buy. In a downtrend, we only sell. But there are two strategies for buying in an uptrend, and the same strategy work for downtrend as well. And those strategies are, first of the strategy is when the price comes down to support, we try to buy here. This type of strategy is called a pullback strategy, pullback buying strategy. And the second one is when the prices tries to move away from this resistance and we trade there or we enter there. This type of strategy is called breakout strategy. So we have two type of strategy. One is pullback, the other one is breakout strategy. How we enter to the market with the help of these strategies? One is at support and one is at resistance. At support, we want to see candlesticks like this, hammer engulfing, bullish engulfing patterns, and multiple rejection patterns or multiple rejection candles which have wicks to the downside. But only in these type of candles, we want, if these candles are small, we want to see a big candle which closes above the support. It could be here, it could be here, but then we can enter next candle opening our next candle. When it breaks high of these candles, we can enter the market. So this is one type of strategy. The other type of strategy is breakout strategy. What we want to see here, we want to see resistance to be broken and we can enter on the break of this candle or on the next candle open, we can enter, and we can, or the second candle, what we want to see that the price moves slowly up and then it comes back and give us a candles like this, like a hammer, but the rejection is to the downside. So we have a candle like this where the wick is to the downside and body closes above this resistance. We can enter next candle open, or when next candle breaks the high of this candle, we can enter the trades. So these are two type of strategies where we can enter the market in an uptrend. In a downtrend, how we want to trade these strategies. So for example, this was the level and this is the other level. So one is pullback strategy, we know that, and the other is breakout strategy. So here we can see actually this trend could not continue to the downside, it broke out to the upside, but we will see how, if it would have broken to the downside, how would we have traded this. So let's see, the candlestick patterns are the same, but they are only in the opposite direction. Here we want to see same candles, but we will sell here. So that's a pullback strategy. For example, the price comes here and it goes back to this area. What we want to see here, we want to see these type of candlestick patterns. these type of candlestick patterns we want to see here to sell the market. We will short the market if we see these type of candlestick patterns here in these areas, and that would be called a pullback strategy, and we could enter on the break of this candle or on the break of this candle to the downside. We could enter here in this area, but while in the breakout strategies we want to see the price to break here and we want to enter here. So for example, it could come like this and then it could go up, and we could see wicks like this here, like these type of wicks here to the upside there are wicks. And when we see a proper big candle, like we saw a candle here, a proper big candle here which broke this resistance, we could enter here. So for downside, the pullback strategy is the same. We need to see rejections from the upper side, wicks from this side. We need to see wicks from the upside, and in the breakout strategy we need to see a solid candle to the downside and we can enter. So these are two type of entry techniques which are equally applicable for uptrend and downtrend, but only we have to see which way is the rejection. In an uptrend we buy, in a downtrend we sell. So these two strategies we use to enter the market. Now that we have learned entry techniques or entry strategies, now let's see how we can exit the market once we enter the market. Let me clean this chart so we can understand it easily. So let me draw this one once again. This is my resistance level and this is my support level. Let me make it a little bit bigger. So now we know that in a pullback strategy we have to enter on a support level. So for example, we had a price pattern which we have already studied, that there is a hammer in this area and we entered the market here on the open of, or when the hammer, the high of the hammer is broken, we entered the market. Now what are the strategies to exit the market? Now we can exit two ways, either by booking a loss or by booking a profit. By booking a loss, we have to define an area below our entry point where we have to exit the market according to our risk management, and we have to decide an area where we have to exit the market according to our risk management to take profit, because until and unless you exit the market you did not make any profit or any loss. You make loss and you make profit only when you exit the market. So let me pull out this long position indicator or whatever you call it and put it here. For example, it's an entry point, and then how we will put our exit point. Now what we have to do for exit points, for SL, for stop loss, we have to find the nearest low from support level. So for example, in this case, in this scenario, the low is low of this candle. So what we have to do is put a stop loss below this candle low. So this candle low is around 3648.66. So we'll put our stop loss around 3620, or 20 is 22, but we'll put around 20. Okay, so we'll put around here. So what is our take profit area? Our take profit area could be high of this previous candle or this wick. So we can put our first TP here, and we have, on the risk to reward ratio point of view, our trades should be minimum 1-to-1 risk to reward, and our win rate should be above 50 to make us profitable if it is 1-to-1. But as we are trading trends, so our risk to reward ratio could be more than 1-to-1, and we assume that once trends starts they continue to go up. Now it's one, so what we will do is, it's an uptrend, we will first TP we will put around this level, which is 4340 or 50. So we will put first TP around this level, and second TP we will put it 2R or 3R. Let's see, we put it 2R this time. So this will be a good risk to reward trade. So this is one way to exit the trade. So you can exit fully here, or you can put at one half of the position you can close here and half of the position you can close here. If we are trading trends, it's better to exit in parts. Stop loss, you have to put your stop loss full here, because if this price falls below this level, this trend is no more an uptrend, because the higher highs will be broken and you can exit the market very early. But in case if the trend goes up and it continues, you will be still in the market and you will make a good profit. And in another case, when it's a breakout trade, how you will manage this one? Let me remove this one. And for example, we see that the price stalled for some time here and then it broke. So, and if we see some candle, if we see a solid candle like this, we see a candle like this, we enter the market here on the next candle opening, or when it breaks high of this candle. How we are planning to have our exits? So this was our entry. What we will do, we will put our stop loss below this candle, whatever candle was there below that candle, and we will put our TPs. First TP should be minimum 1R. So for example, 1R is here. Where is 1R? Let me see 1R. So we enter here and our first TP is around 1R. So this is here 1R. So our first TP should be here, and then we can extend this line and we can make it 2Rs or 3Rs our TPs. So we can have our take profits like this. So this is a breakout trade, and we have to manage this trade like this. We have to exit our positions in this way. Hope you like this video and you got something out of this video. Thank you for your time. Enjoy and have a lovely day.